This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Benjamin Grubbs, founder of Next 10 Ventures. Next 10 Ventures is a venture group focused on the global creator economy. They have invested in over a dozen early-stage startups covering enterprise tools and services for creators, as well as startups building new experiences for consumers. Benjamin, thank you for joining us.
Thanks, Hall, for having me here today.
So tell us more about your background before investing in early-stage companies.
Spent most of my career in the Asia-Pacific region, 15 years spread across Hong Kong and Singapore. I'm working for internet tech and media companies like Yahoo, eBay, Turner Broadcasting, and joined Google in 2012 in Singapore. And through that company, I actually made my way back to the States in late 15. Spent a few more years with the company and then broke off in early 2018 to get full-time into incubating startups and then also kind of invested into the ecosystem.
Great. So what excites you right now?
Overall, I'd just say like the pace of growth of companies that I've been supporting since 2018, and their success in closing Series A, Series B investment rounds. The valuations of the companies are way up, and there's a great group of institutional VCs that have come in to this ecosystem to actually lead these later rounds. I was bullish. I was bullish enough in 2017 into the space that there was still a lot of upside and growth ahead to kind of focus on it full time. And so overall, my expectations have actually been exceeded by the pace of growth, and some of this actually just really being accelerated over the last 2 years by the pandemic, as there's been more online consumption in general, both across media, commerce, and how that's both disrupting but also creating new opportunities for companies in this space.
Great. So what's your advice for people investing in startups? What do you tell them to do before they write that check?
I think within the creator ecosystem, overall piece I'd say is just getting hands-on and using the product or service. And I think if you're kind of both investing or even creating companies in the space, and actually a key stakeholder is the content creator, spending time with the creators and actually really understanding kind of their pain points, their needs. So you're addressing some of those problems and needs, and not doing something actually in search of the problem.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell the founder to do before they go out to raise funding?
I think I would say a similar thing. It's just being somewhat grounded in research or insights and understanding kind of some of the problems and pain points and what you're aiming to kind of serve or solve, and the market that you're actually playing in. Understanding overall size of that market, the addressable market, and stage or the manner in which you're actually going to go and tackle that problem or opportunity, and being somewhat measured about how you're building the company at the outset, and what I also understand to say what's really critical on day one and within that first year.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here?
I think within the creator ecosystem, across a couple of fronts, the ad market's robust. The bellwether thing in the space, I think, is still YouTube. And I think in 2021, my estimate is the company, they haven't announced their earnings yet, but I would expect to see Google stating that YouTube ad revenue is surpassed $30 billion in 2021, which is pretty significant for the company itself. And I saw something earlier this week on ByteDance and TikTok There were some reports that in the last year, the company is generating $4 billion in revenue for TikTok. This is all ex-China. And this year forecast to triple to $12 billion. So while YouTube is healthy and growing, I think their ad revenue has tripled since 2018. So between 2018 and 2021. We're seeing this also with other players in the market, TikTok, and what Amazon's doing as well. So ad market's robust, commerce robust as well. And this intersection of creators actually in commerce, and just going back to YouTube, that ad revenue would kind of suggest that there's about $600 billion in attributable retail and e-commerce activity coming off of the advertising, and that audience actually kind of acquired through the platform. So a piece I kind of see there is like, who's winning that share of wallet? Is it legacy consumer product companies, digital upstarts, or creators themselves actually kind of creating these D2C brands? And lastly, I think how the industry is kind of evolving is the intersection with Web3. And there's more of that actually happening in 2021, continue to be more of that actually occurring in 2022. And so I think, there's a big emphasis kind of on community building. And some of those are the key tenets of actually what creators have been doing for the last 10, 15 years. Building pretty robust communities, on platforms like YouTube, and then figuring out ways to actually drive monetization actually of those communities. And that's a big thing that's occurring right now, kind of in some of these Web3 projects. And so I think some of the processes and methodologies are just the manner in which people have actually been executing over the years actually in the creator space is, I think there's a lot of applicability actually in Web3 and hence some of the overlap there.
Great. And what's the biggest change you think we'll see in, say, the next 12 to 24 months in this space?
I'm here in Los Angeles, and I definitely see a lot of activity firsthand in the United States. And as I said earlier, I spent the majority of my career actually in the Asia Pacific region. One thing I'm expecting to kind of see more in the next 12 to 24 months is how this ecosystem and the companies actually that are operating it, and also investors, are continuing to kind of grow and emerge in other international markets. For YouTube, their single biggest market for daily active users is India. High growth markets as well in Southeast Asia, Latin America, also Africa and the Middle East. And so I think there's been a lot of investment capital put into companies actually that are based here in the US. And I would expect to see over the next 12, 24 months, both entrepreneurs and founders pursuing kind of market opportunities outside the US, and some of the investment capital kind of following actually where those opportunities are.
Great. Well, let's talk about the investment thesis for your fund. What exactly is it, and what's your criteria for making an investment?
Initially, I was really driven by the problems and needs of creators that I was witnessing at YouTube, and what the company was doing itself or not at all to kind of address those problems and needs. And so that's kind of where I saw some of the gaps and opportunities and felt that there was an opportunity. And then as I saw more creators actually go full time and then start to employ a dozen or in some cases 100 plus people, from there it was just like, wait, this is an ecosystem that's actually spawning its own market economy and multi-billion-dollar one at that. And so the creator ecosystem it's disrupting legacy companies and industries. It's spawning its own multi-billion-dollar companies that are both enterprise and consumer-facing companies. But also, I say that those companies are going to get disrupted themselves, just as we've seen over the last 25 years with the broader internet. And there's been different cycles over those last 25 years. And I think companies that emerged on the scene between 1995 and 2000, it wasn't game over and those are your winners. Those companies later kind of gave way to other businesses that got started, between 2000 and 2005 or 2005 to 2010. And so I think just within this ecosystem or within the creator economy, I think we'll continue to kind of go through some of the cycles, and some of that's also going to be driven by the end user, the consumer. And I have three kids at home, 7, 10, and 12, and how I see them kind of consuming media or adopting commerce, is in some ways I would say different than an 18-year-old or a 28-year-old. And so what they're open to or what they're accepting it's different than a generation kind of before. And so I think as companies actually are tuned into that. That again creates opportunities to disrupt, and I think for existing businesses to make sure you're actually not being disrupted. Overall, another piece of just kind of add to that, I think just given the size of companies in the space, from a market valuation, I'm hopeful to kind of see that some of these companies actually start to see exits in the public market, and I think also through that, we'll continue to see M&A activity kind of, continue to see M&A activity within this industry.
Great. Can you talk about one or two startups that fit that thesis?
Well, so within the kids media space, late last year, we saw Moonbug, which was formed less than 5 years ago. A company get formed and then was actually acquiring YouTube Kids channels. And then late last year, they were actually acquired themselves and with funding from Blackstone, for a $3 billion exit. Overall, what you kind of saw there was entrepreneurs, seeing that there was opportunity for growth kind of on the YouTube platform, as a content creator and actually creating kids content and then generating revenue from that, from advertising or consumer products. So much so that, again, Moonbug was capitalized and actually formed. And the way that just segment of the market has actually kind of grown, it's attracted, private equity money to come into the space as well for that exit. So that's one that's been pretty encouraging. I think the other side is just on the enterprise layer and on the tech and tools. A company like Patreon, formed by Patreon, which was founded by a content creator, Jack Conte, had a pain point in how his content was actually being monetized on YouTube. And so the effort that he was actually putting in, the cost that he was actually putting into the videos, he didn't feel was actually being, what he was receiving back actually was not adding up to the effort kind of put in. Thought there was a better way. And some of that then was a direct fan monetization, which he then pursued that with Patreon. And they've seen great success with their company. They've also taken on additional investment, now have a $4 billion plus private market valuation. So I think, we've seen good opportunities and growth on the enterprise side, and just companies get to that multi-billion-dollar valuation because the industry itself is large enough and creators themselves are actually small businesses. But the other piece is just how consumer consumption of media has actually shifted, and in the kids space shifted from linear television to platforms like YouTube. And with that, where the audience goes, advertisers go, and consumer products and other forms of revenue kind of follow as well, where then you have, again, a company like Moonbug can actually get, could become pretty sizable just building a business off of YouTube.
Cool. So, there are many challenges in the space for startups and investors. What do you find is the main challenge startups face in today's market?
One big one to me is just staffing and recruitment. And so I think within tech or within internet companies, there's been a lot of competition over the last 20 plus years for engineering talent. And I think within the creator ecosystem, it's the competition for talent that's in the role of like creator partnerships or community management, right? So if you're building a company that's enterprise focused tech and tools for creators, well, your key stakeholder is a content creator. And so then how is your company actually getting connected and scaling that outreach and getting the adoption actually of your product or service actually from the creators themselves? And so there's a number of companies that I kind of see that have open job recs actually for some of the lead kind of creator partnerships, or they're titling that in as like a community manager. And so, I think there's more demand actually for those roles than there are people who have years of experience actually in this space. And so I think it's both an opportunity actually for those that actually want to be employed, but it's a challenge, for those that are actually doing the employment.
Right. So what are the challenges in this space for the investor?
Depends, I think, on what type of investor you are and what stage of this market you're kind of entering. Whether that is early stage as a pre-seed or seed investor, or as a growth stage in the later stages of the company. So you can kind of answer that in a different way. I think on the pre-seed and seed stage, on the pre-seed, you're going to be interfacing with founders and companies that could be pre-product and pre-revenue. And so, and I don't think that's unique just to this creator ecosystem, but then it comes down to, you're betting on people and the founder and their ability to execute. And so I think from that side is just the building out the relationship. And one challenge, I think, on that front, challenge and an opportunity, I would say. It depends how you're executing this, but because of the pandemic and maybe more interfacing with people actually through Zoom or Google Meet and through video and actually not in person, can both create a challenge in terms of actually how you're building those interpersonal relationships with people at that early stage. Well, the other side is you create an opportunity because the time spent actually traveling and meeting in person and how many meetings you can conduct in a day. And in my case, I think pre-pandemic, I was spending the equivalent of 9 full work weeks in the air flying around the world. I don't do that as much anymore. And so I got a lot of time back. And so that was more time to actually spend with founders and those that I'm actually working with already within the portfolio and interfacing with more people, again, not just here in the US, but in regions like Africa, the Middle East, Latin America, and Asia. And I don't need to hop on the plane anymore to go have that meeting. We can just do that now through Zoom, which is great.
Great. Well, there's different subsectors and applications in this area. If you had to pick one or two that are good opportunities to pursue today, what would you put at the top of the list?
I think at the top, I was touching on this earlier, just the intersection with Web3. I think just given the somewhat still newness within that space. And, I think you can approach that from an infrastructure or enterprise aspect, or approaching that from the consumer side, so consumer-facing kind of products and services. There's an immense amount of opportunity there, and that's an area I definitely think about a lot, and I'm seeing an increasing number of companies kind of pursuing that space, and as I said, kind of trying to leverage some of the success and learnings actually that have been occurring over the last decade plus from the creator ecosystem to kind of fast track some of the development actually now in Web3.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I'll say just on myself. So we touched a lot about just on the investing side, where I also spend a decent amount of my time is also on incubating and shaping new companies. And so in late 2020, I formed a company called Collide. I co-founded that with a partner. And then in early 2021, co-founded a separate company called Creator Plus. Collide actually operates within the creator marketing space or marketing advertising sector within the creator ecosystem. And Creator Plus is in the entertainment sector within this creator ecosystem. So yeah, I spent a good amount of time kind of on being hands-on and actually shaping companies. And that draws from a lot of my prior experiences working in companies as an operator. And so I really just didn't switch that off. That still kind of continues. And then where I spend a lot of my time with the founders that I'm fortunate to kind of be involved in and support as an investor is then also trying to look at how it can actually play an active role in some aspect of their company. And that definitely varies company to company and also kind of where they are in the stage of the business. But that's a part to me, I think, is it keeps me pretty active and energized. And, also I'd say it's just like when I'm able to learn and benefit actually from one is also then seeing how you can actually apply that to another. And so, all in, I think now is I'm interfacing with close to 30 companies spread across a number of regions actually around the world. And it's an exciting time. And as I said earlier, I think what I was thinking about back in 2017 to kind of leave a corporate career and dive into this early stage career, it's been entirely rewarding. And if I had to go back and do it again, I definitely would.
Great. So how best for listeners to get back in touch with you?
I'm active on LinkedIn, and it's probably an easy way to get in touch with me. And if I've hired a number of people through LinkedIn and met a lot of good founders actually through the platform as well. So that's probably the easiest way to get in touch.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.